Hello everyone, it's Red with RedDragonLeo.com. It is Sunday night, the 29th of September. It's been a long time. I've taken some time off here, and pretty much all I've been doing is playing the junior stock market and doing quite well in it. So I've taken a little vacation, I guess, from writing. So hopefully you guys are doing well without me, but I didn't want to leave you hanging because I know that most of you trade the big market, the S&P, the NASDAQ, and the Russell, etc. But you really should look into these penny stock picks. We're getting a lot of good picks here right now, and my partner and I have got the right connections. It's becoming very, very, very profitable. And I'm leaning towards it to be my primary focus. But I'm not going to leave you hanging. I'm going to do a update here for you because this is a critical time. We're definitely going into a bear market, and we have a couple dates that we want to look for. And I'm just going to use Ron Walker's charts. I don't have my charts open, so hopefully you guys don't mind. Hopefully Ron doesn't mind. He's a good chartist. I like to borrow his stuff when I get a chance. Okay, where we're at right here, as you can see here, this is a very important trend line. This trend line right here, if they solve the issue with the government shutdown that's supposed to be midnight, Monday night, September 30th. After that, the government shuts down. I think they will not shut down. That they'll make some type of agreement and cause a rally in the market to come up. And that's kind of what I'm looking for, is a rally and possibly put in a new high. I don't know for sure if that's going to happen or not, but first we're going to go down Monday, and we're probably going to hit this 1680 area. The futures are already down to 1675, so it's probably about 1680 here on the S&P, which happens to be the 50-day moving average, which is great because that's kind of what we're expecting. Then if it is positive enough and if they ram it, then this is the area that I would expect them to hit, to put in one more final high. I don't know if they're going to get it up that high or not. I really don't, but that would be my best guess, is that they're going to give it an attempt. If they do it, I think it's going to happen by this Friday, and that is October the 4th. And there's several reasons for it. First of all, that is, the 4th is an 11 date. You know, they like to use numerology. Gary the Numbers Guy kind of turned us all on to that. So that's an 11 date. And also in Ali's post that is at the bottom of my post here, you're going to see he talks about a supermoon that is coming right after October 4th, into that weekend. So it's very, very possible that either we put in a lower high, maybe to here, or we put in a higher high up to here. So that's like 1740 to maybe 1750 area is where I would expect it to stop and hit that trend line and then fall back down. After that, after October 4th, the next thing that the market is going to start worrying about, of course, is the debt ceiling. That, of course, happens to be on October the 17th. Now, we also know that Legatus is the 8th through the 17th. How coincidental, right? So if we start down, we'll probably start, and we start down and the fear starts to set in, I'd say we're going to break the 1680 on the next go around and probably head on down towards this support level here at the 1627. If this happens, then this is going to be a major wave one down. Major wave one down. If at that time on the 17th they do as I'm expecting, which is to not raise the debt ceiling but push it off to another date to give the market a little relief and saying, hey, it's you know, we're not going to default today. We're going to push this out to, I don't know, maybe they push it out to the end of November or December the 1st, or who knows where they'll push it out. That's what they do, because they can't come to an agreement. So at that time, that would hopefully end the major wave 1, put a little fear in the market, and everybody that was short here thinking that we're going to break, you got to think like the market makers do, and they're going to try to squeeze people out. So if the market does start falling after a rally next week, so again, we're looking for Monday to put in low, then Tuesday through Friday to rally some, I don't know how high, but that will be from the government not shutting down. That's supposed to happen on October 1st. Okay, but then there's the October 17th debt ceiling issue. So after the market rallies and has its little relief rally, then fear sets back in again, approximately the 14th, and then we run down. And then on the 17th, if everybody is short on the 17th, you know they're going to come out and say something positive that will allow them to get a bounce in the market. And there you go, your bounce, it comes back up, hits your back test. This should happen and run into, my best guess would be October the 22nd, and that is because it is a double 11 day. And that is because all the digits add up in the year, which would be 10, 22, 2013. That adds up 1 plus 0 plus 22. It's a master number. You don't add 2 and 2 to get 4. And then plus 2 plus 0 plus 1 plus 3. And that, of course, equals 29. And 2 plus 9 equals 11. Okay, so it's an 11. And then that's on the yearly basis. And on the daily basis, just 22 is a master number, so it's 11. And again, that means it's a double 11. So that stands a good chance of it coming back up here and hitting some major wave 2 back up. Then if you hit that into the 22nd again, and this is a back test of this line, at that point the exhaustion runs out. Maybe they spread something else on the news that gets them in a bearish mode, and down you go. And this time around we're going down in a major wave 3, and our ultimate target is 1420 to 1460 zone, and that is based upon filling this gap back here from January 2nd. That's where I'm looking for. So the major wave 3 goes down, and then maybe it stops here. I don't know where it stops. Then you bounce back up, and then you come back down for a major wave 5. And at that point, you're going to expect whatever date they said in the future, November, late November or early December, that of this year, that would be the end. So maybe this 5 wave, obviously I've stretched it out too far, so I don't think it's going to end in 2014. I think it's going to end by late November, early December, whatever date they set to raise the debt ceiling to push it out. So there's your 5 big waves down, and that whole thing, that whole big move down is called a primary wave 4. As I speak of, it's a primary 4 down, with the primary wave 3 starting. It's off the screen. It is this entire move. That is primary 3. It actually started at 1074. So it was a long time ago, back in 2011. Okay, let's I probably should got a better color here for you, but okay, let's scroll down here a little bit. I can't leave that on here. We look at the rest of this chart, and you can kind of get an idea and see basically what we're talking about. Same kind of scenario here. You're close to, you'll probably come down here and turn and go back up, because once you hit that 50 market, they tend to turn and run back up. And then if you ran it in and popped it back up there to that 80, you curl back down. That's just kind of what I'm expecting. And this again will be based upon Monday putting in the low, and then the government doesn't shut down in October 10th through the 4th. We rally up here, and then kind of the same thing here. We come down on one of these numbers, and then you put in your negative divergence, and at that point then you're really going down. Okay, so that's what I would expect there. Same thing here, put in some negative divergence. As you can see, market goes higher, less on that. Okay, let's see here. So what I was doing here with in the actual charts here, and that does pen doesn't seem to want to. Okay, out of memory, so I can't do any more on that one. Crap. Sorry about that, gang. All right. Crap. Alright, I'm going to have to pause this a second, so hang on. Okay, got that fixed. Now, if we look at the blog here, the new post, what we're talking about is if we make it back up and put in a new high by Friday and get it up to, I don't know, 15,800, 900, maybe even 16,000. If we get up that high, then we look for a drop down to about 13,000, or I think about 13,200 is about that 1420 range. So, you know, it's possible to go down as much as 3,000 points. And that's in a primary wave 4. I'd guess more in the 2,500 range. And this is actually an old video which will be replaced. But okay, so I just kind of tell you here a little bit about what I've been doing here in the penny stock and junior stock market. We are coming out with picks. A lot of picks are coming out. So you read that and make sure you're subscribed to the newsletter. If you're not, you can click here and click on this, and it'll take you to the actual newsletter page to sign up. Okay, and this will not be in here. There's only going to be one video. This is an old video. So let's see. Okay, so here's basically where I start talking. There's a lot of charts in here that I'm talking about primary wave 4 and 3, so you got to read it a couple times. So I'm going to let you just read that part. Oh, that's what I wanted to talk about. Also, Allie here. Allie sent me an update tonight. I know lots of you like to hear what's going on with Allie. And this is what he's talking about, this new moon, which is like a super moon. It's supposed to be pretty powerful. That's why I think we could have our top on the 4th. So anyway, I'll let you read this, and we'll get back to Ron's charts here, and we'll look here at some of the other ones. You can see right here that where we are right here, we are very oversold, and we should curl back up some and allow this to curl back up, come back up, and roll back down. Sure, it could keep on going straight down, but after it drops Monday morning and gets close to that 0 line, you'd expect it to curl back up by the time it hits that 0 line. We're getting close, and here's another example right here of it bouncing. Here is the 1674 is the 200 period moving average on the 60-minute chart. So all signs say that after Monday we should put in a low. Weekly chart here is real important. As you can see, this is probably really the most important one. Right down here, you're going to see these negative divergence setting up on the MACDs, and you can see it falling from a high 50 something all the way down here to 40, and it's really struggling. It's trying to get back up here. It can't get to 0 because it's just too overbought, and we're going to end up seeing this thing drop way down here below 0. It may not even, well, I don't know if it's going to drop below 0, but it's probably going to drop to 0. It'll go below it if we really have a collapsing wave down as far as I think. So everything here on the weekly chart is bearish. If they somehow squeak it out and get a new high in, that's going to surprise me. I'm not really looking for it. I'm really not, but I'm not going to rule out that they don't trick us and come back up here and hit this trend line 1740 to 1750. Just be aware of that, guys. But the bottom line is either from here at 1729 already the high primary wave 3 from 1074 SPX in 2011. That's primary wave 3, and then you start down to primary wave 4 down to this 1420 1460 area. It's either already started or we got one more move up, and then it starts. I'll do a further update as the week goes on, guys, and try to keep you updated with video. Thanks a lot.